Got a really nice $340 snipe on YM post FOMC. So I'm going to go into my top-down analysis on what led me to believe that YM would be the leading asset into the higher time frame draws. So when you break down the daily time frame, this shit is just cooked, to be honest with you. It's ever since December does open, it's just been nasty price action, consolidation range really. And then you have this SMT now being put in. So this is what the 4 hours specifically, but this daily range is just kind of fucked. But you have the SMT here, so that led me to believe that we could go higher. And then with this large opposing run on NQ, you're just not going to trade it. So what does large opposing wicks not support? Expansion. So you have NQ completely invalidated just due to that fact and within this daily profile. Now if we get this strong closure here, obviously it's not going to reverse the days about the close, but if we get the strong closure here, then you could trade this into these highs, maybe into this gap, take out, something like that, or just YM into all-time highs here after this strong daily closure. But you had this large opposing wick, but what did YM have? A small opposing wick running its previous day low, putting in the lower low SMT, and then ES just doing ES middle child shit. I really only focus on NQYM. So when you go into the 4 hour here, this is where it really adds. I've been focusing on the 4 hour a lot here, trading 4 hour power threes and just 4 hour profiles in general. But you had 6 a.m. open, put in this bullish candle, bearish candle on NQ. First, like cracking correlation, well, excluding the SMT divergences, but within the candles themselves. So you have bearish close, bullish close. So weaker, stronger. Super simple. We understand this. Then again, it closes over this wick and a bullish candle as well, bearish candle as well. This one, you could say, okay, if this continued and closed higher over here, you can maybe choose ES because now it's as close as YM is in proximity. So that's what I'm trading. Like, what is the candle closing as? What is it telling me? What's the story it's telling me? How did it close? Obviously, it closed bullish here, so it's telling me that it wants to go higher. Also, it's the closest proximity into this draw. This one's farther, and it's closing bearish. I don't want to touch this. The large opposing wick, these signatures in price, all of that combined tell me, yo, YM is the best to trade. So what do you do after this? You look for the 1400 low to get put in, but you have to wait for 1430 because that's when Fed comes and speak. And he then delivered good news, good news relatively, but he is cutting rates. So they are cutting rates. Cool. But all I'm really worried about is the signatures and price action. So I'm going to wait for 1400, then I'm going to wait for 1430. You go on the 15-minute, price just opens up and just takes off without you at 1400. So you're like, okay, cool. I need a continuation signature to get involved with price because this could fully just take off without you. Like, don't catch a falling, like especially in bullish price or bearish price, like don't catch a falling sword. Don't catch a falling knife. If it's just taking off, then hey, you missed your entry. Close the charts, get away from it. Don't be the guy that like top ticks a reversal like I've done before, where you're like, oh shit, this is taking off without me. And you enter here, like you're like, oh, this is gonna continue for sure. And then say this candle prints like bearish, like I have entered here, and if I would have top ticked a short, I would have been fucking rich. But instead I top ticked a reversal going long. And you learn from that pain. You learn from that pain and you learn not to do it again. So you want to see those continuation signatures that then get you on side with the price. So you have 1450 putting in bearish candles on both. Cool. Okay, now we can see if we can get a continuation signature. And then we get the PSP, and it was so beautiful. I was like, yes. Yes. And then we had the SMT, so now we have a two-stage crack to continue, two-stage crack to provide this continuation signature. Now what you do from there, after 1430, 1445 is going to open up, you can assume it's going to go higher. So what do? You just filter down again. You've spotted the low on the 4 hour, now you're spotting the low on the 15-minute. So you come into this 3-minute chart, you have the SMT that got put in. Sweet. Where did you go? It's over here. Sweet. Got blind for a second. And then as that happens, you have the displacement away. So that's exactly what you want to see. The PSP puts in, and then we have displacement away from it. That's what's confirming the SMT. Because you can put an SMT here, and you can just mechanically just trade SMTs. But if you see a fucking SMT and this shit starts chopping, this SMT is not confirmed. Don't touch it. It's a fake SMT. It's probably going to go lower. You want to see displacement after the SMT is put in. That's what confirms it. So once this happens, you have these fair value gaps. You can even, if you trade inversions, there's a little one that gets inversed there, fair value gap. So what I do, I go to 1448, the 3-minute candle with that. I break down the 3-minute into a 1-minute. You're just filtering price. That's all it is. It's all fractal, so you just filter it. So my original entry was at the bottom of this 1-minute fair value gap right here. Didn't like that this was a devil's wick, but it's 1 minute, so it's not like a higher time frame devil's wick, or devil's mark rather. And then I entered on this candle right here, this one. So had these two. I was like, oh sweet, we're gonna take off. Hopefully I can get tapped in. I wish I had my first one. Like this ran higher first, and I moved my stop loss. I wish I would have got tapped in down here. Whatever. I still got a good trade, but here was the candle I entered on. This one traded lower. And then once we had this enter candle change in state delivery here, I just moved my stop loss here. And then I exited for a quick snipe like right around here. So my true entry was like here-ish, and I got out like right there. So it was almost a 2-hour trade. My true draw was up here into these higher time frame swings, because if you open up this chart, there's a really clean market maker buy model here. Like, let's look at this broken down on the 4-hour chart. Like, look at this. This is nice. You see this time and time again. Have the 2-stage at the lows confirming the higher time frame reversal on the 4-hour. Like I showed you, the 4-hour 2-stage. Look at this, just market maker, boom, liquidity, just engineering liquidity on these stops, boom, put in the 2-stage reversal, expansion, retracement into this fair value gap, or these draws down here, just a slight retracement, not a reversal. And then you have 1, 2, 3, 4 spots of liquidity to run, and it was super clean if you look at it and you zoom out on the 15-minute time frame. So that was my trade I took. Quick little snipe on YM. Super proud, especially because statistically I don't do well on FOMC days, so it was really good to see. So that's also what aided in me. Just I got the snipe. I was like, boom, I'm out. Close the chart. I'm done. I got my little money. I'm gone. Wish I would have held, but hey, shoulda, coulda, woulda. So that is my top-down analysis. Hope you enjoyed. Hope you learned a thing or two. Goodbye.